Hi guys, wanted to welcome you to one of the first updates for Think Property Club. Bit of education here. I want to talk to you about the things and strategies that professional property investors do to buy things differently, do things a little bit differently. Some people are really curious about this, so I thought I'll add this to the first post for people. It's a little bit about land tax in Queensland. Let's start off here. So land tax explained for Queensland, Australia. Okay, we want to be certain this is Queensland. I want to show you how you can buy multiple properties and not go over the land tax threshold. So all information was recorded at this date to reflect current situation. So you might be listening to this later, and you got to double check that is that still relevant today. This is not to be taken as advice, but merely an example. And things may have changed, so you must consult a professional. You must seek independent advice. As you would need to if you're going to do this anyway. So you need to talk to an accountant or a lawyer to verify this and any other information. We suggest, the people we use, is specific law, nice and easy. They know how to do it. They do it for us. Land tax explained in Queensland. This is from the Queensland government. Now, land tax means that you have to pay a percentage of the value of your land that you're sitting on. Now, even though you might think your land's worth more, because it's normally the case in Queensland, it's probably not going to be the taxable rate of what they value it at. I know I've got blocks of land I think are worth 700 that they rate at 350, so or below. So this is where you've got to look at it and then find out, obviously, from the Queensland government, what they value the land at. It's very important when you're purchasing property, because we're not talking about the house on it, or the unit or townhouse on it, because that's different. We're talking just the land component of what you're buying. You must find out what the value of that land is. Now, you start paying land tax after $349,999. Okay, so as soon as your land is taxed at $350,000 and over, then you start to pay a rate, and there's some of the rates there, just so that we're specific. So that comes from the Queensland government. There's your link there. And this is about, now what I want to talk to you about is, you might not have heard this, or you might have heard it, the different ways that we buy companies. So you just buy companies, buy properties. You might buy a property in your own name, which is probably what a lot of people do. But as you become a bit more professional, you start buying companies in trusts. Okay, mainly this is for asset protection and distribution of profits and losses. So you're actually really, to put it simply, instead of you buying it in your name, you're buying it in a company name, and the company owns it. So this is for calculating the land tax for rates of companies and trustees. Land tax is paid after the value of the land is assessed at over $350,000. So I'll explain that a little bit, right? So this does not constitute legal advice. Again, a company or trustee is liable for land tax if the total taxable value of their land is $350,000 or more. Now, the way I buy property is I buy them in trusts, and I have a trustee, and it's a company. So let's say you buy property A in property A in the company trust you called a proprietary, acting therefore for a trust, right? So I think, so this is a way that, this is pretty much the way that you'll take out the loan, or what the ownership will be. So property A, so you let me go back a little bit here. You set up a trust, and then you buy a property in that trust. Okay? Now, when you set up this trust, and there's different types of trust, right? I'm not going to get into the whole thing about trust. You can consult your legal professional about this, but I was trying to explain the land tax component. If you set up a trust and you call it A Proprietary Limited, acting for a trust, then you buy property A in that. And then you go along, and in the same trust, you buy property B in that, okay? Then property A is valued at $200,000 of land value, and property B is valued at $200,000 of land value. So if you add them together, it equals $400,000, which is above the threshold. So you start paying land tax, right? Because the threshold was $350,000. You got two properties under the one trust or one ownership. So therefore you pay a rate of land tax. Now, if you and it's going to cost you more. Trusts do cost you money, but there is a lot of reasons why you would do it, especially asset protection. Again, not legal advice. A company trustee is liable for land tax if the total is over 350, and then you pay land tax, right? But if you buy property A in a trust called A Proprietary Limited, acting for a trust, and then you buy property B in another company, and they're two separate companies. Now, the trusts have to be set up in a certain way as well. I just want to say that straight up, right? You must check, things about beneficiaries and directors and all this type of stuff to just double check, okay? We can't, the normal way that most professional property investors get to, and you start off simple like this, then you get a bit more advanced, but we don't mix the properties up with the trust. You can, but we just don't do it sometimes. And I'm just showing you one example, right? You can choose to do things your way, but simple here, we buy property A in a company called A Proprietary Limited under a trust, and then property B under B Proprietary Limited under a trust. So therefore, these are seen as two different companies. So then when property A owns the land is valued at 200, and then property B is under a different company name is valued at 200, they're totally different identities. So obviously the land value has to be less than 350,000, or you're paying land tax anyway. But see, the problem was before, because we bought them under the same ownership, we went over the threshold. But this way we're not. So if you buy two properties in the same trust with the trustee, then you went over. That's simple. That's basically what it is. Now, there are a whole lot of things. With trust, you've got to watch out, because if a personal company is overseas, you'll pay land tax. If a beneficiaries are overseas, you pay land tax. And if a trust does not say anything about distribution not going to overseas beneficiaries, then you'll pay land tax. So there's some things that you have to double check with your professionals. It's not legal advice. And foreign companies, anyway, if it's a foreign company or trustee of a foreign trust, a surcharge of 2% on total land tax is done as well. So we don't want that. Now, he's just going back to the legislation, right? From the Queensland government, a trustee, you are liable land tax if the total taxable value of freehold land is held in a trust of 350 or more. When calculating your total taxable value, we will not add the value of land held for one trust to the value of any other lands you hold as trustee or another trust, unless it is clone trust or an individual or company, right? So that's from them. There's a public ruling, there it is there, and that says basically along the same lines of the same thing. Now, there's also a document that you can get that shows the case and where it's gone through, and this is, I put a link there to that one there too. But I'm showing you these type of sources where, we find out and verify this information. So there's just a quick little bit there, just a little bit of tidbit of information for you. I hope that serves you well. So, Land Tax Explained for Queensland, Australia. See you later. Hope you enjoyed this. Look out for more coming up. Get that app and check it regularly, or go to the website and look out for all our social media accounts to just get these updates and go, oh, that's interesting. The reason that you are a Think Property Club member, is so that you can constantly go to that website and get access to all this information I'm talking to you about now, and just scroll through like a book and read stuff at any time, and the same as your app if you're on a coffee break or anything like that. Hope you enjoyed this. Give me some comments.